Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of October 13, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week, Maryland mortgage rates were again near the record lows for 2014. If you take a look at the bond chart on the screen, what we see there is that we've been on a kind of a choppy short-term trend with the bond moving higher, interest rates moving lower. We have hit a ceiling of resistance. You can see the big red candle on Thursday and again on Friday. That means the bond sold off. We were predicting that. That's why we were recommending locking last week. And we're going to go ahead and recommend locking your Maryland mortgage rate to start the week this week as well, because the profit is there for the traders to kind of sell into this, take their money off the table. That would force bonds to sell off in the short term, move rates higher. There's much more risk to the downside of the bond selling off than there is to the upside of getting a better rate. So lock in your Maryland mortgage rate. Now, if you're more than 60 days out on new construction or something like that, you can certainly float. But the short-term volatility in the market, we have to tell you to go ahead and lock in. Take advantage of these great rates now. Now, if we dig into the economic news released last week, the first report I want to look at is the weekly initial jobless claims that came out on Thursday. Came out very good, 287,000 claims. It's a drop of 1,000 from the previous week. We were expecting 293 claims. So jobless claims are coming out below 300,000 2 weeks in a row. That's very good news. Shows the labor market is gaining steam, and we'll have to keep track of that. That could be good news for the economy. Then we saw the Federal Reserve release the minutes from their meeting the previous week. In that meeting, they basically discussed their target is inflation they see remaining below 2% for the next 2 years. So there's no hurry for them to raise short-term rates. They also said they're revising their economic outlook lower because of global concerns of the world economy is not doing well and a strengthening dollar. So the Feds gave the market an indication they're going to push out moving short-term interest rates higher. That was able to rally the stock market, and that's why the bond kind of sold off Thursday and Friday. If we look into the housing news, CoreLogic released their August home price index for 2014. It showed an increase year over year in home prices of 6.5%. Now that's a good number, but that's down from July's year over year of 6.81%. Now, CoreLogic also said they're predicting that the home price appreciation from August 2014 to August 2015 will be 5.2%. Now, that's good numbers. We're right in the historical average of 5 to 6%. That's very sustainable, so that's actually good. The double-digit appreciation we've been having was not sustainable, so this is actually good news on the housing market. Now, on the local news, the next free first-time homebuyer seminar is this Saturday, October 18th in Towson, Maryland, at the Sheraton Baltimore North Hotel right there on Delaney Road. That's from 10 a.m. to noon. And then the next one coming up in November is going to be in Laurel, Maryland. That's a Wednesday, 6:30 to 8:30 p.m. on November 5th at the North Laurel Community Center. And then we're back in Frederick again on Saturday, November 8th from 10 a.m. to noon, and that's at the Hampton Inn right there in Frederick. Now, you can register for either one of those seminars by giving us a call in the office at 410-412-3319 or online www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.